You're a real estate wholesaler. You're struggling with closing deals consistently on a monthly basis. You're riding the wave of closings. I've been there. What about if there's two other options that could potentially help you close consistent loans and also put additional money in your pocket? Would you be interested? Would it make sense for your business to add these different revenue streams into your business? So this week, guys, I want to talk about two things. How to help you close more deals as a real estate wholesaler by using fix and flip loans, bridge loans, DSCR loans. And the last piece is I have the ability to work with you and you can refer business to me and I can pay you a referral fee. And that is going to be really cool. And when I say referral fee, it's going to be a commission because you're not a licensed individual or a licensed broker. So let's get into it, guys. So you are a real estate wholesaler. You're struggling with the ups and downs. And the number one thing you're probably struggling with is locating cash buyers. And cash buyers are your cream of the crop, your top of the shelf. I get it. But also at the same time is if you can't find enough cash buyers to close your deals, how good are your deals? They're pretty much worthless because you can't close them, you can't get your assignment, and you don't get paid. So all the hard work that you did in marketing, all the hard work you did to work with the seller to get the right price for them that made sense for you and for them. So what would happen if you actually marketed your assignments with financing options? Not saying to forget about your cash buyers. Your cash buyers are at the top. Number one, get it. But number two should be at the same time. If you can't find a cash buyer that is going to close within, let's call it 7 to 10 days, you need to start talking to people that are investors that use other people's money to buy properties. DSCR, fix and flip, bridge loans, private money, even hard money. 85% of cash transactions are truly not cash. They're using somebody else's money, whether it be hard money, private money, anything to that extent. It's just a cash transaction to where you're not seeing that actual amount. What I consider cash is cash going from that buyer's bank account into title. That's cash. Not the cash coming from a private lender into their bank account and then into the title company, or a hard money lender, private lender, bridge lender wires the money directly to title. Those aren't cash buyers. I honestly, and you can disagree, what is a cash buyer in your mind? What does a cash buyer do? Because in the end, as long as you're getting paid, in the end, it closes, monies get wired, it's funded and dispersed, you're good to go. So what stops you from actually working with individuals or entities that want to close using financing? Is it the delay with appraisals? Let's stop there and I'll hit that one right home because that's probably the biggest one. Right now, appraisals are taking 3 to 7 business days. They're not moving very quickly. So I can agree that slows you down. The other thing I bet you've got heartburn with when it comes to appraisals is your deal might not be priced correctly. It's easy peasy lemon squeezy when you have a true cash buyer where they're doing their own due diligence. They're not getting the house appraised. So in the end, you're going to be able to go back and forth and finagle on price. With an appraisal, it's in black and white, and you have to go with it. Otherwise, the deal doesn't get closed. So make sure you're pricing your deals right. So I'm sure there's some heartburn there. The third thing on appraisals is who pays for them. I've heard this, but it's standard. This is a cut and dry situation. The buyer, your end buyer, is going to pay for that appraisal. You don't have to pay for it. The seller doesn't have to pay for it. Unless you guys have pre-negotiated that in your actual contract, there's no one else that's actually paying for it. The buyer is going to pay for it. So what other heartburn do you guys have working with buyers that use lending? They don't get qualified. So the first one was appraisals. We've covered that pretty well. 2, they don't qualify. If you're working with an experienced loan officer broker, he or she should be able to tell you within hours of getting all the documents together from the buyer whether they're going to qualify. Is your credit score? What's their credit score? If it's good enough, we're good to go. Do they have enough capital in the bank to pay for the down payment and closing costs? Are they closing an LLC? Do they have all the LLC documents put together? And then we just need basic verification, front and back of a driver's license, and then any other items that potentially come up out of underwriting. That's really it. The biggest piece that will play into your part is 1, the appraisal, making sure it comes back right in the pricing so you guys have got the right number, and 2 is the actual rents. Some lenders will use the schedule off of the appraisal. Some will allow you to use the rents that are currently being collected on the property if it's occupied. Another caveat, you could have the property occupied. Let's say it's leased, it's $1,000. The 1007 comes back off of the appraisal at $800. Guess what? The lender can use the $800. Some lenders will use the lesser of the two. So be careful of that because your DSCR ratios have to be in line. So if they're going to do a DSCR, the ratio needs to be 1.0 better. But that end buyer, if they are having a DSCR ratio of 1.0, I will let them know it's not a deal to look at. And I'm just being transparent with you because it's losing money. That DSCR ratio of 1.0 will only cover the principal, interest, taxes, and insurance. It doesn't cover any type of maintenance. It doesn't cover any type of property management. It doesn't cash flow after that. So they're losing money. It's a bad deal. So either they have to lower the purchase price and also increase the rents to make it work. Is that going to hurt your deal? Potentially. So I will be open and honest and transparent with you as much as I possibly can. And lastly, guys, I'm going to go right into it. I work with Nexa Mortgage. Nexa Mortgage has a program called Business Development Manager where we can work with unlicensed individuals that can send us leads. And if we close those deals, you and I, as a real estate wholesaler or a CPA or an attorney or an insurance person, will have a pre-negotiated contract in writing that every time you send me a deal and I close it, I pay you X amount. When we're out and about talking to people, how often does a mortgage come up or someone's buying a house or they're doing investing? You're naturally having those conversations already. So why not have those conversations naturally and also get paid for them? Because today you're making butkus off them, 0. So why not actually converse, figure out what they need to do, refer them, and I will close the deal and get you paid. It's as simple as that. You're probably saying, he's full of malarkey. No, it's about simple as that. If you're interested, comment, DM me, message me, whatever you want to do. So guys, if you're a real estate wholesaler, working with end buyers that are going to use financing is not a sign of weakness. It's really getting your business, 1, to steady itself. 2, you can continue to grow your business. Think about the population. You're looking at a very small population of cash buyers. Now you've opened up the population to the whole market. And I even have some options where I can work with some investors that have bad credit that we can go to a private lender that can get the deal done. So there's options out there. You just have to explore them and figure out which ones work best for you. Cash is king. I get it. But if you're not getting deals closed consistently and you're working hard, now it's time to start talking to the whole investment community and offering financing on your deals. So guys, if you're looking to grow your wholesale business, you're looking to help yourself and your family, adding financing would be that piece that you're missing. So guys, if you guys want to talk, feel free, comment, share, like. Love to be able to have a conversation with you. Hope you guys have a great one. Stay safe, stay healthy. I'll see you guys on the other side.